Welcome to your financial reporting class. Today, I'd like us to focus on inventory and biological assets, that is IS2 and 41. IS2 governs the accounting treatment of the asset of exchange, which is inventory, and IS41 focuses on biological assets, which include living plants and animals. Now let us start with IS2. IS2 guides, of course, and informs the accounting treatment of the asset inventory. Inventory can be described as an asset held for sale, and of course it comes in three forms: finished goods, work in progress, as well as raw materials. For us to recognize inventory, rather, we need to have, the framework's requirements of probable flow of economic benefits from the asset to the entity, as well as reliable measurement. Now, measurement is a key item under inventory. The standard IS2 states that inventory should be measured at the lower of either the cost or net realizable value. Remember, of course, what we call your prudence concept. Now, when we say inventory should be measured at the lower of cost and net realizable value, we want to go into the details of what makes the cost of inventory. So this includes the free on board price, purchase price, non-refundable taxes, delivery cost. We have got conversion costs. I think we also have all costs incurred in bringing the asset present location, as well as condition. Some costs must be excluded from inventory, and of course this includes abnormal waste, which is to be considered as an administration mistake, storage costs, administration overheads, interest costs, and so on and so forth. We also mentioned NRV. NRV simply means the estimated selling price of an asset less the estimated cost of completion and estimated cost to make a sale. Right, so in our standard IS2, only two inventory valuations method are encouraged: first in, first out. FIFO inventory should be valued at on a first in, first out basis. Average cost, we use the above method assuming, of course, stock is used interchangeably. So I'd like to say here we have got two methods that are encouraged. There's first in, first out, which is FIFO, and average cost. We use the above methods assuming that units in stock can be used interchangeably. But in practice, of course, in reality, most firms value inventory at actual costs. Okay, so the IS2 prohibition. The standard prohibits the valuation of inventory using last in, first out. Okay, all right, so let us make headways and try to see if we can also discuss biological assets. Now, our biological assets relates to biological assets, government grants, and agricultural produce at the point of harvest. Products which are the result of processing after harvest will be dealt with under IS2. So let's begin with the key terms, and I think that is very important for us to appreciate the key terms under this particular standard. A biological asset can be described as a living plant or animal. Agricultural produce, of course, is the harvested product of the entity's biological assets, for example, and see the connection between biological assets and inventory. From a cow, we get milk, for instance, and milk is to be treated as inventory by those who trade in milk. From coffee plantations, we get coffee beans, and of course, that is to be treated as what? Inventory by those, rather, who trade in such. Okay. Agricultural activity means management by an entity of the biological transformation of biological assets. Remember, agriculture is business, Biological transformation. This is a process of growing, degeneration, production that can cause changes of quantitative nature in the biological assets. Okay, a group of biological assets is simply an aggregation of similar living animals or plants. So for instance, a chicken belongs to a group of birds. I think maize belongs to grain, and so on and so forth. Harvest is the detachment of produce from a biological asset or the cessation of a biological asset's life processes. Okay, so it should be, appreciated that harvest is an intervention in the biological processes of a biological asset. Fair value, which is simply market value, is described there. Carrying value, of course, is the amount at which an asset should be carried in the FP. Again, in keeping with the framework, we must have those two, requirements for us to recognize, depict by word and amount, the value of inventory, the value of biological assets rather. Okay, so now let's progress to measurement of biological assets. Initially, measure these assets at fair value. Let's estimate it cost to sell. Of course, the challenge we have in Africa is that we don't have, what they might call perfect markets. Subsequently, measurement, after initial measurement, biological assets can still be measured at fair value less estimated cost to sell. Changes in fair value of the asset are to be recognized in the P and the L. Right, grants and biological assets. A government grant receivable is only recognized if it relates to biological assets. Okay, now let us close this particular discussion in terms of theory, at least from this point of view. Bearer plant. A bearer plant is one that is expected to be used by an entity for agricultural produce for more than one accounting period. Okay, so we have orange tree, an example there, a mango tree, those plants that bear fruits. Attributes of this plant is that it is used in the production or supply of agricultural produce. It is expected to bear fruit for more than one period and has a remote likelihood of being sold as agricultural produce. So this plant therefore is different from the normal plants that we deal with. All right, so that when it comes to measurement, the produce of the bearer plant must be measured at fair value because we call that agricultural produce. But the bearer plant itself, the trunk of the vine, should be measured at either cost or fair value. And again, the students were able to see here that it is not, easy to do this. It requires serious tracking in terms of your costs. So thank you very much. I'd like to end there in terms of the brief awareness. But let us go to the questions and see if we can make sense out of what we have. So I've got inventory and biological assets there. And I think these two standards, they speak to each other in terms of, similarity. We have got question 124. C company has the following products in inventory at the end. At what amount should total inventory be stated in the statement of financial position? Select your answer from the drop-down list. So if you're in the computer environment, you have to click on that, arrow or sign, and then push in or select the answer rather. Pick the answer that is correct. Okay, let's try to work out something. Remember that inventory must be valued at the lower of. So I'm going to have something there. This is question 1 in our case, question 124. Okay, so let's go there. I've got about 3 products, A and B and then C. So let me just pick out the quantities QTY. Hope that you can see that. I've got 1,025 and 800, so 1,025 as well as 800. Great. So now my job is to pick. I go for the lower of. Please remember what we had discussed. Stock must be valued at lower of cost, okay, or NRV. Okay, so I'll be comparing, and that will inform which figure I pick. So let's check. Product A's cost is 40, and for the selling price is 55, and selling cost is 8. So how much do we have? I think I'm using, I don't want to make, unnecessary sum. I've got 55 minus 8. I've got a 47. So 47 compared with cost, I think cost is still lower there. So I go with the cost. Okay, next I've got 15 cost, then 25 for, I think that one is easy to call. 21 against 15. Which one is the lower of the two? Of course 15 is, so we'll go for that one. We'll go for the 15. Next I've got 23 compared to 25 minus 5, which is 22. That's a close call, of course. We have to go for the 22. Right. So after we have done that, what we need to do now is to multiply, find the product, and duplicate the formula as needed so that you can have those figures there. And sum up, I think you can see that figure there. 95,100 is the value of this inventory, following the rules. So I think you can see that option there, and of course that's supposed to be the option you should have picked. Let us go down. Which of the following situations is the net realizable value of an item of stock likely to be lower than its cost? So we begin. The production cost of the item has been falling. I think the production cost will be lower. So we're looking for what will cause the NRV to be lower. The selling price of the item has been rising. So again, the NRV will be higher there. We're looking for when it is going to be low. The item is becoming obsolete. I think that is a fair one. When demand for the item is increasing, the NRV will be high there. So I think we go for C. I hope that you can see that option. When the item becomes obsolete, when inventory is obsolete, its NRV will be lower than the cost, likely. Okay, let's progress to the next one. Which of the following is not the outcome of a biological transformation? Again, I think I just discussed with you. Growth is an outcome, procreation, degeneration is, but harvest is an intervention in the biological processes of an asset in this case. Okay, 128. How is a gain or loss arising on a biological asset recognized? I think this is a textbook line which we could have read. And I think in this case, A says it should be included in the statement of profit or loss, not retained earnings, not other comprehensive income, deferred and recognized over life. I think that is not correct. The best option is A. Right. Okay, let us progress. Now we are on 129. Identify whether the following statements about IS2 is or are correct. So one says production overheads should be included in the cost of inventory on the basis of company's actual level of activity. We normally use the budgeted level of activity. So incorrect is to be taken. And then in arriving at the net realizable value of inventories, settlement discounts should be deducted from the expected selling price. I don't think so. Normally that becomes discount allowed. So again, incorrect. So please on top again, incorrect. Then in arriving at the cost of inventory, FIFO, LIFO, and weighted average can be used. I think the standard prohibits the usage of LIFO. Why? Because again, you don't want to, deal with a situation that would make less sense. For instance, when you deal with perishable products, the usage of last in first out would not be appropriate. Okay, so again, incorrect. And then lastly, it is permitted to value finished goods inventories at materials plus labor cost only without adding production overheads. Now that will make you to incur a loss. All right, so again, that one may be challenging. I think that is still incorrect. So we shall state that all these are incorrect. All these options are incorrect, and that those will be the options that we're supposed to take. So half a mark for each correct box. Want us to progress to 130. And there's a connection, of course, between that and these other standards. Isaac Limited is a company which buys agricultural produce from wholesaler suppliers for retail to the general public. It's preparing financial statements for that year and is considering closing inventory. In addition to IS2 inventories, which of the following accounting standards may be relevant to determining the figure to be included in its financial statements of closing inventory? I think it's straightforward. It's supposed to be D there. I think you can see there is a D there. Let's check. Is that a D? All right. This was going to be a close call. Okay, so in addition to inventories, which of the following accounting standards may be relevant to determining the figure to be including? All right. It deals in agricultural produce, so they should already be using IS 41. And in this case, they buy this as merchandise, all right, from most sellers, all right. So IS 41 is kicked out already on that point, unless they were the ones who were in the process of plant management or animal management. So I think the only option that makes sense now is A, which is events after the reporting period. And the question is why. If inventory loses value, then the standard requires us to make adjustments, IS10. Let us not forget that. Okay, so finally, we want to look at these two questions that involve calculations. I want us to start with 131. It says, in preparing FS for the year ended 31st March 20x6, the inventory count was carried out on 4th April, meaning that it was missed, because if you check this question on the requirement, the year end is at 31st March. The value of inventory counted was 36 million. Between 31st March and 4th April, goods at the cost of 2.7 million were received in inventory, and sales of 7.8 million were made at a markup of 30%. So now give us the correct figure that was there for inventory at the year end. And I think that in this case shouldn't be very difficult. Again, what question number is that? Question number 131. So let's deal with that question and see if we can make headways. So I think I'm dealing with millions of dollars. All right, so the cost that is drafts is given there, and of course this is for 4th of April, which is this 20x6. Okay, 20x6. Right. Now let us see what inventory was there when on value at year end on 31st March x6 again. I hope that we could understand this easily. So let's go pick up our figures. On the 4th of April, the value of inventory counted was 36 million. So let's go and put the draft there. We say 36 million. And we're saying inventory with the cost. We are told that between the 4 days, inventory with a cost of 2.7 million was received into inventory. We never had this inventory. So we less the receipt, less what you didn't have. So we say, of course, we're assuming FIFO 2.7. Let me just do it again. Okay, let me just do that one again. All right, so that's what we have there. And then we say add issues. In this case, we're saying the issue is supposed to be at cost as well. Remember, inventory is valued at cost. So I'm getting the 7.8, multiplying that by 100 and dividing that with this assumed selling price. In this case will be 130 because the profit markup is 130. So if I can just do that in my box there, which is relevant, say equal sign 7.8 multiplied by 100 divided by 130 gives me how much? I'm getting a 6. Okay, so when we try to add all these amounts now, we may discover the amount that we're supposed to have there. So I'm getting a 39.3 million. 39.3 million. Hope that you can see that. Right, so that's the answer there. In your drop down, please pick the first option. Right, so finally, I would like to give you this challenge. Please, you can revert with question. Let us have a go at that question. Thank you very much for listening. I want to see you on the other side. Thank you.